The first session of the week on Wall Street ended with a mixed picture, as the main indices moved in different directions. The S&P 500 rose slightly by around 0.2%, while the Nasdaq gained approximately 0.5%, supported mainly by large technology stocks. In contrast, the Dow Jones Industrial Average fell by about 0.5%, weighed down by losses in industrial and consumer-related companies. The market picture remained divided. Technology giants continued to drive the positive sentiment, while several traditional sectors stayed under pressure. Among individual stocks, Nvidia stood out, rising by roughly 2.2% and extending its positive trend of recent weeks. Investors appear to be betting on continued revenue growth from AI-related products, as demand for powerful graphics cards and data center solutions remains high. Expectations of strong quarterly results later in November also fueled buying interest. Another major gainer was Amazon, which closed up nearly plus 4%. The market reacted positively to news of the company's new collaboration with OpenAI, aimed at strengthening Amazon Web Services' position in cloud computing and artificial intelligence. The agreement is considered strategic, as it is expected to give Amazon access to advanced tools that could enhance both its business services and overall platform productivity. On the other hand, the performance of traditional sectors was weaker. Industrials and banks, including Caterpillar and JP Morgan, declined after the latest economic data showed a contraction in manufacturing activity and signs of slowing consumer spending. Meanwhile, stabilizing U.S. bond yields prompted investors to limit exposure to riskier assets. In the energy sector, oil prices remained relatively stable, with ExxonMobil and Chevron edging slightly lower as the market awaited new production announcements from OPEC+. Overall, Monday was a session of moderate optimism, with technology stocks setting the tone for the market while most other sectors remained neutral or negative. Analysts believe that the coming weeks will be shaped largely by corporate earnings announcements and the Federal Reserve's next moves on interest rates.